Okay, so now we seem to be set, and it is already 1 o'clock. What do you know? Thank you, Gay Talk. Okay, so we are now all set, so I can get going. All right, thanks, Greg.
Okay.
Bye.
Bye.
Good afternoon, folks. Okay. Hang on a second. Let me get my Apple event thing up here first. So somebody gave us a key to go to. Before we get started, because I know they're going to start doing interesting things at the Apple event. Here we go. I'll try to get up on these screens also once I figure it out. Okay, I don't have it, but if somebody has a link, please put it in the box, okay, so we can follow along. Let me get to this part and we'll get going. Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trade. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commissions costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Trading options involves risks. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides educational and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you can't afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific date or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. Yay, now we can move on. All right, time to share my desktop. Share my desktop. Here we go. They've changed the screen on my side. WebEx updated everything. But hopefully it'll work the same for you guys. All right, keep the chat box up, and hopefully, let's see. So last Tuesday was Tricky Tuesday. We were saved by Chinese stimulus. This Tuesday, it's all about Apple. Can you guys see my desktop? You looking at PhilStockWorld at the moment? Anyone? Thank you. All right, and I think we got Thinkorswim. Let's take a look at where we are. We had a nice little dip this morning. We're using the exact same levels we were using last week. We have 17.1. These haven't changed because the market's just sort of drifting along here. So, in fact, they're getting stronger and more reliable as future shorts. So we have 17,100 on the Dow. We have 2,000 on the S&P, and 205 has been the spike up here, and 17,150 has been the spike up here. You need to know what your spikes are, too. But generally, the lines we care about are 2,000, 17.1. We have 4,100 here. That really hasn't broken very well to the upside for the NASDAQ. On the Russell, 1170, but 1175 has been a spike on the Russell. The Nikkei keeps touching 15.8, so that's been a great short, and we catch those down. That's a big move. 150 points there is $750 if you're awake at, what time was that? That was only 7:30 at night. So if you caught the spike up at 7:30 and you rode it down over the night and you stayed up until, well, let's see, it's 7:30 again. So you're talking about staying up till 10:30 in the morning. So nice stretch for you night owls. But there's good money to be made there. But this one we caught in the morning. I mean, look at this, 1175 at 710. back to 1160. That's $1,500 on the Russell. These are great things. Wombat says, no audio input test fine. Other people can hear me though, right? Yes, can people hear me? Of course people can hear me because you've been talking to me. Try rebooting Wombat. Okay. Because other people can hear me, so that's all right. Now, so on the futures, you catch these little moves. Now, we're watching the dollar here. See, the dollar peaked out here. Now, as the dollar goes down, if it goes down, it's easier for the indexes to go up. But the dollar rising, and this is a big rise in the dollar since yesterday morning. From 84 to 84.50 is half a point. So that would account for a half a point of downward pressure on the indexes. Oil is pretty sad. Oil's at 92.70. There's nothing going very well. Gold is really pathetic. Gold's down at 12.50 again. That's what we consider a really good base up. If you want to start a gold play, this is a good place to start. Okay, apparently a few people have to reboot to get sound, but hopefully I don't have to keep repeating that because Howard said it. Thank you, Howard. All right, now, moving on, we're going to go to trade, and we're going to go to active trader. And there's nothing really playable right now. Now we're watching for breakdowns. And over in chat this morning, we talked about Control F, RUT, what? All right, TF. So here's where we were talking about the short lines earlier this morning. Oh, no, these are the bounce lines. Silly. So what time is this? So I called to bounce off these lines back at 10:16. And then the question is watching what we call the strong and weak bounces. So the strong bounces go to 17.040. And let's see where we are on the Dow. We place oil. We don't care about oil right now, so we'll do the Dow YM. So I said 1740 was the bounce. When you have a drop, it's very simple. We're ignoring this little spike up. It's relevant, but not very relevant. But from 17.1 to 1700 is a 100-point drop. That means your weak bounce is 20 points. Your strong bounce is 40 points, a 20% retrace and a 40% retrace. And in fact, there you go. Look at this green line here. That's 1740 on the dot. So when the 5% rule lines up with a support resistance line Thinkorswim is drawing, that means it's an extremely significant line. So we're going to be watching 1740 closely. Below 1740, very bad for the Dow. It didn't accomplish a weak bounce. Now, I mean, keep in mind, this was me at 10:15 or whatever time it was, 10:16. So at 10:16, using nothing but math right here. So 10:16, when the Dow was right here, I was able to tell people that the Dow was going to bounce to 1740. And the 1740 was our strong bounce line. Now it's failing that. Now if it fails 1720, it's into a new down leg. But 1720 is the weak bounce line. You see how first it gets up to 1720, hits resistance, down, down, down. And by the way, when you're on the Dow or something, you always want to round up to these 25 and 50 lines also. So you actually could use those if you're actually betting on it. I was just putting around the exact lines of the weak bounce and the strong bounce. But that's what the 5% rule does for you. It lets you predict these things way before they happen. And so you're watching and you're ready to say, okay, I know it's going to be a confirmed breakout if we get over these. And of course, you want to use a 1750 line. And if we got a serious move up there, then you would assume we're going to retrace all the way back up to 17.1. But we didn't. We had a very weak breakover, fell, failed, right back to try it again, fell, failed, and now it's sort of drifting around down there with the Apple announcement going on. Oh, by the way, please chime in if there's something going on Apple, because it's hard for me to talk and listen and find out what's happening. But if anything exciting goes on, please type it out. Let everybody know. The S&P, so our line for ES 1993 and 96. So let's take a look over here now and see what ES did. Look how funny it is, right? 1996 on the button, 1993. This is just the 5% rule. That's how it works. We had a drop from we had a drop from 2005. I was counting a 15-point drop there. So I was counting the drop from attempt to 2005. And this is the thing, by the way. It's one thing it's hard for people to get used to about the 5% rule. It's a lot of it is you just got to sort of use some intuition. It's like, yeah, we tried at 2005. So generally this falls from a attempt at 2005. Even though it didn't actually hit it, we know what they were trying to do. Then we fall back to 990, so I don't care about the little bit below. But basically, I'm thinking it's a 15-point drop. So I decided it was a 15-point drop, not a 10-point drop, and therefore the bounces would be 3 and 6, and it's exactly 3 and 6. It's see, a very tricky part about the 5% rule is that it's not a rule so much as you have to sort of use a little bit of knowledge of like how things are moving. So like on the Russell, for example, we said it went from 75 to 60. All right, and again, I predicted this 2-3 hours ago. So on the Russell, what did we predict? We predicted 1163 and 1166 because, again, it's a 15-point drop there. And, again, it's 1163 and 1166. Isn't this silly? It's silly how easy it is to predict what's going to happen. Here's 1015 when I made the prediction. Here's 1066, where it would be very easy to re-short it when it fails a strong bounce. Here's a failure. Here's back to 1163, and because it failed 1163 now, you expect it to go back and retest 1160. Now, it might make an attempt at 1163, but probably it'll top out at 1163 and break even lower, unless Apple really takes off. That's the thing that we don't know for sure what's going to happen, because Apple is going to move the market one way or the other. Sorry, Lane. Try Greg. Okay, so I don't know why he's having this sound. Anyhow, onward to the next one, and the last one will be the Dow. And well, let's see what I said. The Dow was 17,000 at the time, and I was counting it as a 100-point drop on the Dow. So in this case, in the Dow's case, I ignored this, and I called it a 100-point drop. So I ignored the spikes, and and that means we're back to the same. Actually, oh wait, we did the Dow already. And Q. Let's do the Nasdaq then in that case. All right, so for the NASDAQ, we looked at 4080 and 85, so we looked at 5-point moves. So on the NASDAQ, 4100 to 4080 means that we're going to be looking for bounces of, this is 20 points, so we're looking for 4-point bounces. And wait, no, I called that a 25-point drop. Sorry, I called the drop to 75. What did I do? Oh, I see. I did the same thing here, 4105. My bad. So I called it a 25-point drop to 4080. Therefore, we were looking for 5 points to 4085. Am I right? Yes. Ha! I did it wrong. I should have been looking because it was only down to here. It should have been 4085 and 4090, not 4080 and 4085. That made no sense. So 4090, it's still, again, it's doing the same thing. Now we're going to test 4085. And if 4085 fails, that's not good, but whatever Apple does now is what matters. So let's go back to Apple. Keep a close eye on them, the AAPL. And they're all over the place. We called a long time ago that 9750 should be the floor on Apple and should hold up. And 100 is going to be a little bit tough to break over, but it depends on what kind of news they come out with today and what they say. So now would be a good time to take a look at what Apple is saying. Okay, so let me read what you guys are saying so we can get somewhere. Okay. iPhone 6, 4.7-inch, 5.5-inch display. Wow, that's pretty big, I think. Cover glass is an ion strengthened thing of beauty. Is it GTAT, the glass? Does anyone know? Oh, I gotta see this stuff. Oh, it's not GTAT? Uh-oh. All right, let's take a look then. That's a big deal for poor GTAT. That's a huge surprise, too. Let's see what's going on. Let's just open a new window. Apple Live event. Usually somebody like Engadget or somebody has a good thing. The Verge says they have a good thing. Apple is live blogging its own live event. Yeah, maybe the watch is GTAT, but that's not good. All right, Gizmodo is usually good. I'm gonna mess around. We like those guys. Starts right now. Okay, here we are. Yeah, see, I like them. They put in these little screenshots and stuff. I think it goes in this kind of order: 227, 225, 224. Where are they? Okay. Where is it? 227. Chromebooks, camera. Yikes, this seems like way too much information. All right, let's see what we got here. 190 million active users. So anyway, we talked a lot today in the main article about like how much we thought Apple was going to go up and what it's worth and so on and so forth and what these things should add to it. But the key is going to be what they actually end up announcing. This is way too confusing. Is this the right thing? This can't be the right thing. They're talking about Google constantly. It's the wrong event. Our iPhone 6. Okay, design. All right, so here's the old iPhone 5. Here's the iPhone 6, which is a bit bigger. And then you've got the humongous iPhone 6 Plus. So that's nice. Graphene sensor will let us look through walls. That's interesting. I don't know. Does anybody know a better place to view this thing? Because these guys aren't doing a very good job. I'm confused by what they've got. Verge, watch the live iPhone 6. All right, let's give CNET a chance. They're doing terrible so far. Oh, sorry guys. I thought usually there's a good way to watch these things, but there's nothing here that's really giving me a good thing of the event as it's in progress. Essentially, they seem to turn these things into just a way to generate clicks for their site. Oh, okay. Rich says Apple.com Live, but is that with audio? I don't want to go to an audio site, but even so, let's take a look because we haven't found anything better. GTAT down 6%. Damn it. And I read what you guys say because you're able to listen to stuff on and on. All right. Apple dropping and bouncing. What does that look like at the moment? Apple does not usually respond well to these kinds of events, but we'll see what happens. Access denied. You don't have permission to look at the Apple Live event. My. That's not nice. I guess you would have had to have signed up in the first place. And we're waiting for that iWatch. That's the big announcement that everybody's waiting for, so we'll see what happens then. No mention of Sapphire at all. All right, Stratus Times has a good blog. Let's try them. I just want something with some pictures that's sort of like following the action, you know? We'll talk about how to play it also. I'm very surprised if GTAT first look Apple iPhone 5. What? Hello? Is this from this year? Oh, they're reminiscing. Okay, this isn't helping. Come on, guys. There must be a better thing than that, right? The guy wearing a scarf demonstrating games. That's good. Apple Live. STREAM. I'm really dumbfounded at CNET. CNET doesn't have something good. They usually do. So more important, what's going on with the stocks at the moment? Don't miss the action. Here's how you can tune in and watch. Tune into CNET's coverage. That's what I want to do. Oh, that's a little better. Okay. See, that's nice and mellow. Oh. Oh, shush. Can we stop these people? Yes, we can. Great. All right, so they're talking about some apps. They're talking about this stuff. We'll keep an eye on this as it goes along, then. Somebody's got a really cool-looking game. Oh, there are presentation notes from Apple directly. Steve, do you have a link? I would appreciate that. Guy with the scarf. See the guy with the scarf? Oh, no, you're talking about this guy. Okay. I like bashing monsters every once in a while. It's kind of fun. My daughter certainly loves it. The graphics are getting really good on these things. It's amazing. Oh, great. Okay, let's try that one now. See what that does for us. Your browser doesn't support our live stream. Seriously? But you can follow the blog below. Oh, I want to follow the blog. That's okay. And is this the blog, all these tiles they're putting up? Yeah, I guess so. Okay. That's fine. That's all I need to have, actually. All right, let's see what they've been bragging about so far. This is perfect. I only want the highlights. Thank you. All right, great. I'll watch it later. It's just a movie, really. Let's see. iPhone 6 Plus, the best iPhone they've ever made. Yeah, great. Continuous seamless design. Here's one question. Is it made out of liquid metal? Apparently not, because LQ, what the hell is it? LQMT just dropped from 27 to 23, tested 22. So apparently this is not liquid metal, even though it does look kind of cool. It is a very nice looking phone though. Wow, look at that. They've got Retina HD display. I don't know what they mean by ion strengthened thing of beauty. What does that mean? Oh, you got your sound. Great. Glad that worked out finally. But it's saturated. Okay. Use Safari for the live event. That's okay. This is fine the way we're looking at it. All right, so liquid metal's still not ready for iPhones yet. Maybe it never will be. Maybe they're going to give up at this point. So that's not good for LQMT. I still think, though, if they fall down around 18 again, I'm going to be interested in just picking them up because they have plenty of other uses besides iPhones. But it's disappointing if Apple hasn't still at this point figured out how to use it. So these phones are thinner. That's very nice. How thin? Well, let's see. It's getting towards 10% thinner. I got to say, I think 10% is pretty good, actually. I mean, if you think about it. The new landscape view? What the hell does that mean? How are all these apps going to adapt to the screen sizes? That's crazy. So the iPhone 6 is a bit bigger. None of this matters until you get to put it in your pocket and try it out. But, oh, look, watch. The crowd watches Phil announce the new iPhone 6. I did not know. I didn't know so many people were waiting for me to find this page. There's a lot more to the iPhone, the larger display. Apps, who cares? We know there's so many apps now I can't even find an app. If there's a good app, I wouldn't know it because there's too damn many. They need more app filtering services is what they need. Processor performance 50 times faster than the original iPhone, but only, what? Well, it's hard to tell on this graph, but only maybe 20% faster than the 5S. Still, 20% is 20%. Oh, 25% faster. Graphics are 80. Again, I care about how much faster it is in the phone I have, not how much faster it is in the phone I wouldn't even consider using anymore. And frankly, at this point for me, I mean, this stuff's fast enough. I'm done. I don't really need better stuff. Super evil megacore. That's great. I support that company. I'd like to buy stock in that company. Okay, so the iPhone 6 is fast, it plays games, it does stuff, this guy was enjoying it, and nothing has really happened since we started looking. Okay, fantastic. So, on the whole, there hasn't been anything earth-shaking announced yet, and so far people aren't all that excited about what Apple's doing. So that's the bottom line. Well, please let me know in chat if anybody does, if something earth-shaking does happen. But so far, Apple's drifting around under $100. The indexes are drifting around where they were drifting around. This is a very sort of indecisive right now because they haven't done anything spectacular. This is a 90-minute event, though, and it's only half hour into it, so we'll see what happens. Obviously, the iPhone 6 was a no-brainer. Everybody knew that was happening. So now the question is, what else is new? And so we're going to watch that. It's not really tradable. I did say earlier, though, that the pick I made when the Qs were down here at 10:15 back in chat was to do shoot, wrong one. All right, so we're going to find that one, QQQ. No. Here it is. Okay, so at 11:13, as I was watching, and here's the decision process. I'm watching the NASDAQ as it's down here. So at 10:15, I said it was going to bounce, and then at 11, coming up around here, I decided it was going to start going back up. And so my call for that to play the Apple event, because it wasn't so much that I thought it was going to go up, it's that I thought it was stopping going down. And so that meant that for a fun play to play this particular Apple event, maybe a pop into the event or after the event, the QQQ weekly, so expiring on Friday, $100 calls were just 40 cents. All right, so I don't know what they are now. They're probably not too much over 40 cents right now, though, because we're not getting a big move on Apple. But let's take a look. QQQ. So I was talking about the weekly 100 calls. So now they're like 43 cents. Not a big move so far. And we were looking at that as instead of playing the futures, obviously playing the futures is the easiest way to play because we're talking about the NASDAQ. But if you don't want to play the futures and you just want to buy a quick options contract, this one, when it hit 40 cents, was a nice bottom. And, oops, for one. And now we're just playing, expecting it to go back up here. Now, if it gets back up, wrong one, sorry. Oh, and there it goes. So we're just expecting to move higher, and if it gets back to 4,100, you're probably going to make like a dime, which is 25% very fast on that little option package. So that's a proxy. You know, when you're looking for a way to play an event, sometimes something like that, a weekly call or something like that, that's the times you do want to use that because it's a proxy for it, and on the downside, you limit your risk. So let's say you put like $4,000 down on it, and you put a stop at 30 cents, so you can lose $1,000 bucks. Now, if the NASDAQ takes off, that call contract could go up $2,000. So if you start out with 3, you can get $5,000 back very easily. In fact, right now, this thing's, moving along. So that's the way you do it. In other words, you don't. It's a big mistake people make when they're buying options. Is that you buy an option and you buy it for $3,000. You shouldn't be risking $3,000. You should be risking an amount you're prepared to lose. Like if your premise is wrong and Apple doesn't go up, and if Apple fails to hold the line, if the NASDAQ fails to hold the line at 4,080 or at 4,075, once it goes below that line, you kind of got to set a stop for yourself. So you do that when you enter it. So you're paying 40 cents a contract. So you put down, let's say, $4,000 for 100 contracts, and you hope to get 50 cents or 60 cents back on it, all right? So that would be $5,000 or $6,000. And your worst case, you say, well, I'm going to definitely stop out if I lose 1,000. So what are you doing? You're making a 50-50 bet. It could go one way, it could go, it's a flippable coin bet. It could go one way, it could go the other way. But you think it's in your favor because the NASDAQ already pulled back, found some support, and Apple's coming out with an event that, as I said this morning, I think is going to boost Apple's stock price. And if it boosts Apple's stock price, oops, and here they go, they're at 125 now, $100.25. So, you can see it over here. So if it boosts Apple's stock price, that's going to pull the NASDAQ up. And if Apple zooms up over here to 105, or 102.50 is what I predicted this morning, where's that thing? So what did I say? I said if Apple goes so figure Apple pops 2.5%. Apple was 99 at the time, and that pops the NASDAQ 0.5% to 100.50, and the premium could be good for 50% if Apple gets a good reaction. If not, it's going to lose less on the direction play. Well, I can't prove what it would have lost otherwise because it's not losing, but as you can see, it's doing exactly what we predicted it would do. So we sit there during chat. And here's a good time to talk about it. Here's how you use PhilStockWorld if you're new to it. Okay, every morning, and I know maybe these seem random. I talk about, I read in the morning. If you go back to yesterday's article, I'll give you a chance over here. So if we go back to yesterday's post, most mornings at the end of the day, at the end of the chat. So when I wake up in the morning, I read the news. All right, and so here we started at Okay, so at 3:50 a.m. I started posting some articles. So as I'm reading, when I read something I think is important, I post the article. So these are my early articles I start with. Okay, so by the time I'm done reading in the morning and I'm ready to write my post, I write my post about whatever I think at that time is the most important thing that's happening in the morning. So sometimes it's a political thing, and sometimes it's a stock thing, and sometimes it's about the indexes. And frankly, some days if there's nothing very important, I might write an article about the charts and the levels because that's just always something you want to touch base on. But this morning it was about Apple because the most important thing happening today is Apple. They're having an event. And that event is either going to propel the markets higher or it's going to tear them down. If Apple drops, the whole market's going down. I mean, everybody's putting there's a lot riding on Apple. So this is how we function. So in other words, in the morning, early morning, I've got my news clip. So when you first wake up, before I put my post on, if you're up that early, then you might want to look over at yesterday's chat and see if we've got any news that came up this morning that I thought was worth reading. Then in my post, I'm going to talk about whatever things I think are important for the day. And today it was all about Apple and what we think is going to happen with Apple and why I think Apple is going to be worth more money and why we have such a bullish premise on the company. I have a little trade idea on Apple here to do a bull call spread with a short put. But I said let's do it lightly because hopefully we get a cheaper entry. Now as it looks right now, we're not getting a cheaper entry. But this is not a big exciting move. And again, I'm still more worried. Had I not been sort of thinking the whole market was going to collapse, I'd be a lot more gung-ho bullish about Apple. But I'm worried the whole market's going to collapse. So Apple's not going to be exempt from that. So if the whole market comes down, Apple can come down too. Otherwise, I'd be way, way more enthusiastic about Apple, because I think if anything's going to be a good stock for the next 2 years, it's still going to be Apple. As a stock of the year at the beginning of the year, I still love Apple. Next year, it might be a stock of the year again next year. If it hasn't moved up significantly by January, I may still like it for a stock of the year. And the purpose of my stock of the year is, what stock do I feel almost 100% confident is going to go up at least 20%? So if the stock's going to go up 20% in a year, then we know how to make 100%, 200% on an option spread on that stock. Or in this case, in Apple's case, I think we set up some spreads that made like 500% 2 years in a row. So if I know that Apple is my best bet for making a gain like that, like 3 years ago with Bank of America, because it's so ridiculously low price compared to what it was worth. So if I feel most comfortable with Apple, then I take Apple and then we set up an aggressive spread for it. And that's the point. If I'm very, very comfortable a stock's going to move up a little bit, I can set up a very, very aggressive spread on that stock that will cash in on that move. I would not set up such an aggressive spread on Caterpillar or Deere or Potash or Netflix or I don't know, Amazon or whatever. I mean, I would not be that confident, or Exxon or IBM. I wouldn't have that degree of confidence in another stock. That's what makes Apple our stock of the year. My 99.99% confidence that $80 was ridiculously low for them at the beginning of the year. Or $80 was actually times 7, so 5, whatever at the time. So 560. So that's how we look at it. Now, so that was the premise. Then as we get into chat, all right, we start talking about some stuff. Now, we get feedback from our members, which is good to have a nice, healthy debate on, like, am I wrong? Do you disagree with my premise? Do you have some other ideas? Are there facts we're leaving out? This is a good, healthy discussion, especially when we're all thinking of making investments in this stuff. So we talked about that. We talked about XRT. Then I looked at some more news. I'm trying to find that part. Whoop, don't do that. Where is it? Here you go. So we looked at some more news, and we looked at just various things that were going on. And one of the things, though, and this is very important, is here. Here's a great article, Nervous Times for Retail Sector. Who's being affected by this Apple webcast, right? So Movado, the watch companies, that's a good idea. The luxury companies like Tiffany, people like that, these guys will all have an interest in what happens with this iWatch. Because if you're going to buy an iWatch, you're not going to buy a Rolex, right? If you're going to walk around with your iWatch, you're not going to have an iWatch and a Rolex on your wrist. iPhone 6 starts at $199. That's kick-ass. Wow. Obviously with a contract, but still, that's great. Yeah, it may be they're trying to pop people out of the NASDAQ ahead of a bull run, or it may just be that people aren't that excited about this. Plus the tune-out, holy crap, that plus is huge. I got to tell you, that's going to be a big seller. And don't forget Apple. See, Apple, they're making their margins. They don't ever sell anything. I think 35% is their bottom line. I mean, I know, and this goes back to when I used to sell computers in the 80s. Apple didn't make anything or sell anything that didn't have a 35% profit margin. And I think to this day, they still have that same thing. 5C is now free. It should be free. Nobody likes that thing. If the 5S is free, that's cool. So anyway, so here's some of the retailers that get affected by this. And you also have to think about, obviously, as you can see, GTAT, massively affected. GLW is affected by this. The liquid metal, LQMT, is affected by this. So a lot of people get affected by these Apple earnings. And also, now what's going to happen, somebody's going to rip these things apart, the semiconductor companies, and they're going to start looking for, like, what this thing's made out of. And then they're going to start announcing winners and losers there, too. Oh, 128 gig. Oh, I need that. What do I have? I can't tell. I think it's 64 gig, though. All right. Well, so now I got some reason. My daughters will be happy because as soon as I upgrade, then the way it works in my family is everything bumps down. So when I buy a new phone, then my wife gets my old phone, and then my wife's old phone goes to my oldest daughter, and so on and so forth. So they're hoping I want to rush out and buy an iPhone. Yeah, I'm not sure what they mean about that GTAT glass. But they're going to pull, so tonight what's going to happen is somebody's going to get their hands on one of these iPhones, rip it to shreds, take out all the guts, and find out, like, who makes every component. Then there'll be tomorrow a lot of shuffling of, like, who won and who lost on the new iPhone release. Maybe not tomorrow, depends on when somebody can actually get a hold of one. So let's check in on the event and see what's happening. Pre-order September 12th. Wow, okay. Well, pre-order, that doesn't mean shipping, though. What are they talking about shipping? So let's see, where did we leave off before, and we'll catch up on these announcements. See, I like this better than sitting there watching the event. I mean, it's like I only want to know this stuff. This is great. Here we go. Okay, so there is the game guy. Health app in iOS 8. You know, everybody likes health. iPhone 6 supports voice over LTE. Ooh, wow, that's interesting. That's cool. Okay, that's a big deal. Voice over LTE is going to be a big thing around the world. It makes the phone a lot more valuable to people. All right, they have better cameras apparently. Focus pixels, software, blah, blah, blah. Yes, it's a great camera. It actually is a great camera. This is amazing with these things. I mean, think of all the crap we used to have to do all these different things in the old days. Okay, add voice and video to the messages, so a lot of nice stuff. Predictive keyboard, learns your conversation style. Oh, that's creepy. Helps you answer accordingly. Are you joking? Soon it won't need you. Soon you buy a phone, the phone's not going to need you. It'll just go off and have your life for you. And sadly, I'll tell you, with two teenage daughters, if they weren't there and it was just their phones, 90% of their friends would have no idea, right? Because all they do is contact. They only talk to people by phone from their rooms. They don't actually see people in person anymore. It's really scary. Notifications for your app. Touch ID lets you securely access content on it. Now, what's that mean, Touch ID? Lets you easily access content. I don't know what that means. That might be interesting. Okay, I assume the iPhone 6 has one of those thumb buttons or something that you can do a fingerprint scan, right? You know what I don't like about this is it's very pro-Apple. It's not like there's no objective voice here. It's all promotional. That's the only bad thing about this site. My WebEx's new format for the webinar? Oh, I don't understand. What's new? What's new? I don't know what's new. It looks the same to me. That's interesting. I was unaware the format looks different. It's all in one panel. Okay. Honestly, I had no idea that it was ever in two panels. iPhone 6 oh, I see. Starts at $290. Yeah, of course, I've never bought. You see, you guys say that to me, and I'm like, I've never bought a basic one, so I wouldn't know. $499. So realistically, if I wanted one, it would be $499. I don't think I want something that big in my pocket, though. And I don't see why this, it's just longer, really, isn't it? Or it's maybe a little bit wider. I'll have to take a look at that. I might conceivably like that. And $399, yeah. I'm not going to rush out and spend $399, frankly. I mean, I'm perfectly happy with the phone I have. We'll see. Most incredible iPhone lineup yet. But yeah, the point, yeah, I mean, look, it's free. Free is free. That's fantastic. iPhone 5S is $99. Yep, there you go. So then what happens? Okay, here comes the good stuff. The vision is to replace the wallet and starting point of payment. Now, see, that's interesting. We were just having that conversation earlier today where I said, let's see, Control FWA. Okay, so you won't need your money or your wallet for that money, just your iPhone or your iWatch. That was my prediction this morning. And now Apple is telling you exactly what I said. See, I don't just pull these things out of my ass. I actually pay attention to the market and figure out what they're going to do. So let's see. Can you please explain how we came up with the index lines on Friday? Well, that's pretty easy, actually. I mean, all right, we'll get back to this in a minute. Obviously, I agree with this 1,000,000%. What they're trying to do, I think, is inevitable. It's as inevitable, as I said this morning, we were talking about in chat, it's as inevitable as a disappearance. Like, you used to have to carry a checkbook like these things, right? And well, this still does, sort of. You used to have your checkbook with you, right? When you went around, if you wanted to buy something, you would need a check because not everybody had credit cards. Well, I'm old, I'm 50. But back when I was a kid, if you wanted to make a big purchase, you had to have your checkbook with you when you went out. You didn't have that much cash. If you wanted to put money down on a car or buy something for $1,000, you didn't usually walk around with $1,000 of cash. There's a lot of money back then, too. That was half a car. So nowadays, who the hell carries a checkbook around? If you've got credit cards, that's what they're for. Nobody misses it. Nobody, I'm sure there were plenty of people when credit cards first came out and said, oh, I'm not going to use those things. It's not the same. It's not as safe. It's not whatever. And then after a while, though, who's got a check anymore? And who's got a coin purse anymore? Nobody. That'd be insane, right, to have a coin purse. But, 100 years ago, everybody had a coin purse. You had to have a couple of gold coins on you and a few high-value notes to walk around with. All that's gone now. And when you think about what your phone is, I mean, there's no reason to have any of these credit cards or any identification cards or anything else. You've got a phone. And the phone has the ability, through your thumbprint and your face and your facial recognition and your voice recognition and a key and a PIN number and an ID number you can type in, all these different ways it can check to know that it's you better than any vendor and better than any piece of paper that they're going to give you. And that includes like getting a government ID. Okay, the government can give you an official ID that goes into your phone and answers to you. And so you can show it to somebody. If somebody asks your license, you just show the officer your phone and say, here you go. Okay, that's me. And then he'll say, please say your test phrase. And you say your test phrase, and the voice ID will identify and verify your voice. If that doesn't work, they've got the thumbprint availability, which is interesting because the police currently don't have the ability to take your fingerprints on the fly. But this allows you to take your fingerprints on the fly. And if all that fails, just like if paper fails, the police could still take you to the station and check you out. But as long as you can ID yourself and give proper identification to all that, they're done with you. You don't need any special piece of paper for that kind of stuff. So Apple Pay is built into every iPhone 6. Okay, yeah. That makes sense. Now, not the 5s. Well, it's too late. It can't be in the 5s because they're already out. So that's interesting. So, and like many things, oh, there is NFC? Is that what you're saying, Craig? They said there is NFC in these phones? Oh, thank you. Okay. There's some rumor. See, it's so funny because earlier, it's interesting, there was a rumor going around that there wasn't going to be NFC in the phones, and that knocked Apple down. And it turns out that was false. It was just somebody trying to, knock the stock down, apparently. Oh, and this is exactly, yeah, see this? I don't know if you guys can hear this if it comes on. Let's see what happens if I press that. Oh, it's just a picture. I think it's just a picture. What's happening here? Weird. No, apparently it's too much to ask it to play, but yeah, look at that. So you use Touch ID, it scans your fingers. There you go. You got your fingerprint scan, you touch your thing, and it's on your Visa card. Boom. That's fantastic. Yes, I've maximized the view. That's crazy. They're very obnoxious. So you're not playing the futures? I'm not playing futures. I don't have time to play the futures right now. I'm trying to show you guys stuff. But like I said, we like that QQQ play. Oh, look at that. Wow. So we like that QQQ play. We could have just as well gone long on futures at 4,080, which would be a very nice move right now. I think the NASDAQ is $20 per point, so you'd be up about 200 and something bucks on that futures contract. But it was like a no-brainer. I mean, and in fact, let's take a look at those Qs and see where they're at. Look at that, 62 cents. That's from 40 cents. So there's that goal, 50 cents, 50%. So this trade, those 100 contracts have now made over 50% in a couple of hours. You see how easy that is? And all it is paying attention. You know, we've been talking about the Apple event. We've waited for it. We have a price that we expected it to go to. We had a move we expected Apple to make, and now it's made the move we expected. And there you go. Now it's up 25 cents from 40 cents. All right, so at this point, I would set a stop at 60 cents. That's all. So now you're going to guarantee you're going to lock in a 50% gain on those calls. And you know, it's funny, while I was talking to you guys, what, 15 minutes ago, they were only 42 cents, weren't they? So they barely moved. Now they're up 64 cents, 65 cents. That's how fast you can make money doing this stuff. The futures contract is the same thing. Is it time to lose the SQQ's hedge? No, Craig, because this doesn't really affect my overall bearishness on the market. We're going to see what sticks, but this is just Apple pushing the market. This is exactly what I said in the headline today of the post, is that it's up to Apple to save the S&P today, because the S&P has been failing and failing and failing. Oh, I'm sorry. So somebody had asked about where we got these lines from, and there's no magic trick to this stuff. The lines. Oh, Monday. Sorry. So the lines, every night, Jean-Luc does our big chart for us, which is very, very helpful. Here you go. And all it is we're looking, look what happened. I mean, here, you know, we didn't decide that the market was toppy at this point. The market decided that. Look, that's the market just telling you it's toppy. That's the 17,100 line, basically. Okay, well, this line is anyway. So at 17,100, the thing starts consolidating. At 2,000, consolidation. At, well, 1,100 on the NYSE was our must-hold line. It's been holding it, so we stay bullish. But, you know, the NYSE stopped up there. The NASDAQ at 4,600 stopped dead. That's the 4,600 line, this line up here. And the Russell has been weird, but we'll call it 1180, sorry. We'll call it 1180, ran into problems. But you see how they all ran into problems at the same time. So it's the market that tells us where it's toppy. We just watch to see where it's going to start forming up. Obviously, none of these guys were telling us they were toppy. It went up and up and up. That doesn't count because it's only 2 days. It's only like a day of rest. Up, up, day of rest, up, 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 day of rest, up, 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 up. All of a sudden, a couple of days of rest, 3 days of rest, 4 days of rest, 5, 6, 7, 8, 9. All right, every day that you don't make them get over that line, the resistance of that line is getting stronger. Okay, and that's telling us it's toppy. And the stronger that line gets, and the worse of a failure you start to have on a big index like the NYSE, which is hard to fake. And that's what I talked about. Did I talk about it on Monday? Yeah, I did talk about it on Monday. Monday I was talking about, the most important thing I wanted to talk about Monday was how you have massive market manipulation, how this is fake chart. These charts are faked. They're fake because I mean, look at this insanity. Here's the S&P on Friday. It was up in the futures a bit, down at the open, creeps back up, but look at the volume here. Think about adding all those bars together compared to these. So there's more volume down than there is up. Then, no more up for the day, really, just sort of selling. And again, bigger volume, flat. All right? And so we can see this, and here it is. I mean, confirmed is a very a light word for what happened here. Okay, this wasn't just confirmed. This was affirmed or substantiated. Or this is absolute proof that this chart is bullshit. Because what's happening here? 160 stocks in the NYSE made a 52-week high. Only 30 made a low. So what are they doing? Same in the NASDAQ. 101 make a new high, 40 make a new low. What are they doing? They're manipulating out of 2,600 stocks. They're taking 100 stocks that give you the best picture. Out of 3,000 stocks, they're taking 160 stocks that give you the most effect on the index to make a nice chart. But what's really happening? What's really happening is 2,000 shares, 2,000 stocks are declining. 1,000 are rising. 1,000 are rising. 1,600 on the, this is used to be the Amex, the NYSE MKT. This is a 2-to-1. Twice as many stocks are falling as rising, yet you get a positive day. And then the volume also, it's not just the actual stocks themselves, it's the volume of those stocks. So you can say, oh, well, maybe those are really big stocks. No, because obviously the volume here is very different, and you're talking about advancing is only 1.1 billion, or 1.2 billion, let's call that, versus 1.8. Here, look at that, it's a 2-to-1. The volume declining is 2-to-1. All right? So that's where this comes from. So the most important thing I want to talk about on Monday was how fake all this is and how you really can't even go by these charts in the first place because they're being manipulated. All right, thing number 2 today, we're talking about Apple. Apple is one of those 160 stocks that make the brand new highs. So, oh, and there's Apple now. Look at that, 102.80. Wow, fantastic. So Apple is one of those stocks that pushes the whole market because Apple is 20% of the NASDAQ. So if you move Apple up 3%, you're moving the whole NASDAQ up 0.6%, and that doesn't even include the small stocks that hang off of Apple, because if Apple goes up, all their component makers start going up also. Also, Best Buy goes up and things like that. The people who sell Apple products go up. AT&T goes up because they're going to sell more iPhones and more iStuff. So that's how all that works. Now, the question here was why is the must-hold? Why is the must-hold line the must-hold? Those are lines that come from a much broader time frame on the indexes, and those lines are what they must hold for us to remain bullish. So in other words, below those lines, if those lines break down, if 3 or 5 of those lines break down, we turn more bearish on the market. We recently adjusted our must-hold lines. We got to the top of our range, and we found the top of the range up here where we are now that should hold. And if it does hold, that's great, and we're happy to get more bullish. But if it doesn't hold, we're going to flip much more bearish on the market at that point. That's what those must-hold lines are about. They're our bull-bear indicators. And if we're over the must-hold lines, we're generally going to be bullish on the market. Cook is now seeing anything. What happened to liquid metal? Liquid metal is still languishing down at 24 cents. 23.5 cents is the last bid on the liquid metal. These things aren't made out of them, and the question is now, will it ever be made out of them? And who knows, frankly. All right, so what's Apple doing now? Let's see. Where did we leave them? There's where we left them. Everything you need for Apple Pay is built in. That's so cool. This is just what I always wanted. Secure. I bet Apple Pay is easy, secure, and private. Yeah, okay. And we'll see if it doesn't get hacked first. You can simply what? You add a card from iTunes. You add another card. I think I'll start with the one card I already have in there. I think I'll click for that. Touch your finger using your Touch ID. Oh, this is so great, though. Come on, guys. This is fantastic. When you add a passbook, its number is stored or shared on your device. Its number is never shared. Okay, well, that's good. Apple Pay is more secure than keeping credit cards in your office. I believe that. I'd like to get more details, but I believe that's true. It should be true. Oh, dynamic security code. See, that's exactly what I was telling you guys I was doing. Last year, this is what I was wanting to work on, a dynamic security code, replacing static security codes from the back of the card. God damn it. This was my business plan last year. I couldn't find somebody who could make it for me. I wanted to make an app that did this. See, to me, that was the only logical way to make this stuff work, was having dynamic security codes like this. Cashiers don't see your name, your card number. This is fantastic. Apple will work with 3 major payment networks. This is, I mean, look, Apple's the 800-pound gorilla. They can do this. They can force these guys to work with them, and it's going to be, you know, the Apple customer base are, you know, people in the top 10%. You can't ignore that customer base. It's just like on the App Store. Apple is a much smaller segment of the market than Android, but Apple people spend 10 times more on the App Stores than the Android people do. So that's now, since there are 10 times more Android users, and the Apple users spend 10 times more, that means one Apple customer is worth 100 other customers. They spend 100 times more than other customers. That's how it works out in the end. So you really don't want to mess around with that. You know, if you're a payment service, you don't have a choice. You will accept these things, and you will work with Apple. You cannot walk away from their customers. Apple will be accepted at Disney World. See, these are great things. They're going to make these sort of things. Apple Pay is relationships, and they'll be able to give you coupons and do all kinds of stuff. I mean, Groupon's going to have to get in line. Everybody's going to have to start getting in line. They're going to get burned by these guys. Think about how many different ways Apple can make money by controlling this process. It's crazy. One-touch checkout, no card number entry, no need to type your address. That's true, too. See, think about how silly that is when you have to give people your name and address when it's right there. All that stuff should be on, see, the thing is, it is on your phone. It should be on your credit card, but they're all scared when someone steals your credit card, they get all your data at once. Oh, and by the way, there's features on your phone, if anyone steals your phone, aside from everything else, Apple does have a feature that if your phone gets stolen, if somebody tries to hack your phone and get into it, it wipes your phone automatically. And you can use Find My iPhone if you guys have that app. Find My iPhone, you can remotely wipe your phone. And wiping your phone, if you're an Apple person, isn't a big deal because your backup, if you have an Apple computer at home, the computer completely backs up your phone. So if you get a new phone, like if your phone breaks with an iPhone, all you do is plug in the brand new iPhone out of the box into your computer, it syncs it up, and immediately you have the same phone you just lost, all set up exactly the same way. There's cool stuff about this. It obviously applies to, compare that to like losing your credit card and what a hassle you go through to deal with that, or losing your whole wallet. It's even worse. But anyway, so I can see what they can do. They could pull this off. If they do it right, it's going to be a huge thing. And then Tim Cook, oh, one more thing. Oh, one more thing better be an iWatch. Oh, here it is. Oh, wow. It's exciting. Apple Watch, what? Oh, is that it? I'm not happy about that. I was hoping they were going to go that long one. Apple Watch. Yeah, I don't think it's that exciting. Is that going to hold their price up? No. That's funny. Nobody thinks it's that exciting. Unless they're kidding. Let's see what it is. And then I don't think they're kidding all those pictures. So it's just a small little square thing? That's very disappointing. See, in the morning article, this is the design I thought they were going to go with. Well, it just seemed like a better one. I mean, that looked much cooler. I've seen that design around a few times, so I thought that was going to be really cool. But I guess it's probably also not that easy to do. But that's a shame because I'm not so exactly enthused about this. Health and fitness, made to communicate, customizable timepiece. All right, well, we'll see what happens. But the point is, the nice thing about the iWatch, I guess, is that they're going to be able to do all this payment stuff and everything else in. Chrissy said, wait, who says? Chrissy says, when do you readjust those lines? We readjust the lines when they need readjusting. Sometimes it's once a year, sometimes it's every 6 months, sometimes it's 2 years without. When the market clearly makes new levels, then we readjust our levels. When the market is in a channel, we don't change our mind. It's not that kind of thing. It's based on very long-term trends. Lost feed to the event. Well, I don't think we've lost our feed yet. We'll see if it updates or not. No Apple monocle. All right, so now let's see. So now we're back to 60 cents, see? 59, boom. So that's the end of that. All right, we had a really nice run there. So nice 50% gain on those calls. That's the way to run your day. Enough to pay for an iWatch. Now you see, if you bought 100 for $4,000, you would have made $2,000, and you can go out and buy yourself. You could have bought the whole line. You could have bought yourself an iWatch and an iPhone 6 and an iPhone 6 Plus. You could have bought all of them. So that's the way to play these events. Okay, so you get yourself some free stuff. And had it gone down, you would have lost money, but you wouldn't want the stuff most likely. It wouldn't be worth buying if the stock has gone down on that. So the futures, let's take a look at how they looked. Oh, I did not want to hit that button. All right, so the futures topped out here. Oh, wow, huge move here, 4,100, 4,110. Apple banged 103, 102.50 is where we expected it to get to. And S&P failed at 2,000 again. Nope, okay, so I hope that answers the question about the SQQQ. Now, let's take a look at the portfolios. All right, so we're done with this Apple nonsense, I guess. That watch to me, I'm already done. As far as my attitude, if that's all they got, I'm not happy. Apple Watch introduces a digital crown, a tool that answers the fundamental challenge of how to magnify content on a small display. Oh, well, maybe they did something cool. You can scroll, zoom, navigate Apple Watch without covering the display. All right, well, maybe they did something cool, but I still think I would have rather had the long design. Okay, let's see, where are we? Portfolios, that's what I want to do. All right. So, meanwhile, how does this affect our portfolios? Well, the short-term portfolios up 36.3%. That's okay. And what do we have here? We have DXD, and that DXD is back to 50 cents. That's actually a good thing because, frankly, that was like $1 last week. So we had a dip, and it was $1. Now it's back to 50 cents. It's October DXDs. It's right near the money at the moment. So it's a good thing that we're still up 36%, even though the DXDs are back down. That goes to the SQQs also. SQQ is, what is that, 330, 250-ish on the spread. So the spread is 250. It's about what we paid for it, about 250. So we're about even on that one. And you know what? I'm kind of taking that off the table. Let's see what, whoa, what happened here? That's weird, my mouse stopped responding. Okay. December 5th NASDAQ rally. All right. SQQQ. SQQQ. Can you guys hear me okay? Because this thing got slow. I think this Apple event is, oh, man. You can hear me okay? All right, good. My computer got slow, though, so let me see if I can knock down a few things. Maybe it's this guy's fault. Oh, McAfee, evil McAfee. Close that window. Something's popping up that's going to make me slow. Sorry about that. All right, now I lost track. So we were talking about in the, oh no. Oh man, I just closed my, hang on a second. I just closed the 7 on both points. iWatch has a sapphire screen. Well, that's not good. Well, that's good, but it's not great for sapphire because realistically, that's a tiny little screen. So you know, it's like, oh, you know, it's you won one thing, but you lost something much more important. They're down 10%. They're actually down a lot more than 10%, down 10% today. They were at $18. So coming back to like 15.50-ish, what are they at? Oh no, they're only at 16.75, sorry. They spiked down, but they're better than that. No, they are. They're 15. Oh no, they're 15.30. That's right. So they're actually playable now. I kind of like. I still like them long term, but we'll see what happens. So as the iWatch, a flexible retina display. All right, well, I'll just shut this thing down because I think it's slowing down my computer at this point. So I'm going to kill that, kill that, kill that. Okay. All right, so where were we? On SQQQ, the question was, should we take advantage? Now it's 75 cents. The December 50 calls. So let's get over to December and see what the 50 calls really are priced at, because you can't trust that thing. No, well, I would have to say that let's call this at, if we can get out of that for 70 cents, let's do it. Okay, so let's make an offer here on the, I'm going to write that down on this thing. So let's make an offer on these to sell them, or I'm sorry, to buy them back. So buy back at 0.70. So let's make an offer to do that. They're 75 now, so if we get another nickel, and I know it sounds greedy, but it's like, I want my nickel. I don't need to take them off, okay? The December 50 calls, they're way out of the money. There's no actual need to take them off. The only thing is that if I don't take them off and we end up getting a nice drop in the NASDAQ and then we cash in our SQQs, the January, the thing is, though, we'd end up leaving those naked. And we don't really want to leave them naked, so we'd rather cash them out. All right, so so while we have an opportunity, while the NASDAQ is higher than we think it should be, it's a good time to take these off the table, and then if we get a nice little correction, we'll be able to cash that part out and take some profits, okay? Because we're up 35% here. You want to take profit. When you're up 35% for the year, you want to take profits. So let's look for places to take profits, and if we can take profits on a bearish position while we're up like this, it's worth doing. All right, now FAS apparently went down today, so that's good for us also. So everything's in good shape here. I'm not worried about these portfolios. The long-term portfolio was down a bit earlier. Let's see how it's recovered. Up, not looking so hot, 20.5%. All right, but we went over this on Friday, so I'm not doing it again. We have a whole, if you guys go to the virtual portfolio tab on PhilStockWorld, you'll see all these portfolios, and you can see where we left it off on Friday and what I thought of all these positions. But there are no major changes I want to make here. There's nothing strange going on. It's just a matter of, it's a change in the VIX, it's changing that or that. But meanwhile, $602,000, we're fine. And you add that to 135 on the other one is 737. So we're still above 735. We want to say as long as we're above 735, I'm not really able to make any adjustments. Craig says, just want to make sure I have it right, SQQQ spread, we are closing the short December 50s if we can get 70 cents for them, yes. If we can buy them back for 70 cents, yes, I would like to close them. If not, I'd let them hang. I mean, why? They're going to go down anyway. SQQQ is nowhere near 70 cents. It's that let's see. It's at $35. So it's so far away from 50 that's very, very unlikely. It's only a convenience for us in that here's the logic though. Because you have the short 50s, they're currently covered by the January calls. If we end up wanting to cash in our January calls, what we'll end up with is all those naked December 50s, and we're going to get a margin charge on that while we have to wait just to collect 70 cents. It's not worth it. The margin that we're going to use to have 40 open calls is not worth the hassle. You know, because we don't have that much margin, we don't have that much free margin sitting around. So it's like, there's no reason to tie it up. It's like we may as well take the money now. It makes it a much easier decision to cash out the other calls if we get a good move in that direction. Oh, filled instantly at 70. Great. See there, and there you go. Also, that's another reason they asked for 70 is because these numbers are bullshit. You know, when you look at the bid-ask spreads in these machines, you can't trust them. All right, because the thing was telling us 75, and here you go filling it for 70, and there you are. See that? Now it's 70. And before it's 75. And the whole thing dropped now to 65, 75. So they're still asking 75, but that's the thing. Don't pay what they ask. All right? If you don't have an emergency to sell, don't go by what they're asking. You pick a price that you think is fair and try to and even after what you think is fair, still try to make yourself another nickel. And you don't realize it, but you know that's almost 10%, or I mean it's more than, obviously it's 7% or whatever it is, but you're talking about almost 10% by saving a nickel. So if you improve, that's just on one entry. So if you save 10 cents, if you save 2 nickels on a 75-cent trade, and if you did that consistently, that would be 15% of your money. Okay, so if you're gonna, if you can improve your whole performance by 15% simply by being cheap about nickels, then you should make that a habit, right? No, the long January 35s, absolutely we're letting them ride. In other words, we still want the protection, but we're done with these because realistically we bought these guys for 260, I believe. Hang on, let me check. I'm sorry, we bought them. We sold them for 260. So we already made $1.90. Always keep that in your head too. We made $1.90 on these things. Yeah, 260. So when we buy them back for 70, we're up 190. They can't take that away from us. That's 70, as it says here, 71% or whatever it works out to. But we're already, so we made that 190 times 40. That's 4,000 times 190 is, I don't know, 7,000 something. So we made $7,000. They can't take that away from us. That's $7,000 profit we have towards our $16,000 purchase of a security. So our net on this, since we made 190, this doesn't matter anymore. This 260, we made 190, and that means whatever 190 is 230. So these now net us 230. They're 320. We're profitable on these calls. All right, so these calls only cost us $2.30. I mean, it actually cost us more because we lost money on the ones before we had that we rolled. But as this position stands now, really we're at $2.30 on that position. So now if they go up to like 460, we got a hell of a profit that we're going to be sitting on, right? Even though 460 is barely above the 420, because we locked in this $7,500 bucks. If these go even, then we're up $7,500 on the whole spread. All right, and 7,500 is 7.5% of our entire portfolio in one shot. All right, so, profit taking goes both ways, but you have to realize the dynamics of these positions and what you're doing. So in other words, when you get into something and out of something, the thing is you lock down your cash position, you lock in those cash gains, and that then pays for your next protection that we're going to place. Because don't forget, what we're doing here is we're protecting the short-term portfolio, protects the long-term portfolio. That's its main function. So in any kind of uncertainty, I'm going to lean towards more protection. This, by the way, makes us quite a bit more bearish. So as the NASDAQ popped, all right, because the NASDAQ was certainly weak without Apple, wasn't it? Let's go to the other one. So the NASDAQ this morning showed us it was very, very weak without Apple's help. Apple boosted it back up here. So we're going to take the money and run because we still think the trend is weak. Look, here's the S&P. They still can't even get back over 2,000. This is not a strong market. So we want to lean towards being more bearish now. We got a little pop that was only, we have a little pop, and why do we have a pop? We have a pop because Apple popped. No other reason. There's nothing strong here. There's no other positions that are doing anything. There's nothing going on in the world that's making this pop. It's just Apple. Apple is such a big component that when Apple goes up a bit, it drives the whole market up. But I still think Apple will keep going up, and that's part of the factor of how bearish we're going to get on the market. You can't be too bearish on the market when Apple's going to probably go to 110 now. So we're not going to have a big correction most likely, but on the other hand, if we do get a big, all the indexes start curling over, they'll still drag Apple down, even though Apple doesn't deserve to go with them. But you know what happens if that happens? Then we're going to take advantage of Apple and reposition. All right, so 10 more minutes. Let's get some Q&A if you guys have any. I think we're done with all the other stuff. I'm disappointed in the iWatch, by the way, so I'm disinclined to get bullish about anything because I don't like that iWatch. All right, but we had our fun. We made 50% on those QQQs. We made whatever, if you took on the index longs, then you made more than, made a little bit of money on the index longs. That's fine for the day. I'm happy. I had my fun with the Apple event. Now we can go back to our trading, and our trading says we expect a correction. All right, this was just a fun little intermission in our regular trading strategy. So Jim is asking, should we be looking? The gold miner, should we be looking to adjust an ABX to get more aggressive here? I think yes. I think 1250 gold is a very serious floor because I just think that there's a certain limit to the cost of pulling gold out of the ground. Realistically, 1150 is the dead bottom. I think at 1150, gold mines start getting shut down and they can't really go much lower. 1250 though is a good floor because obviously the gold miners like to make some profit too. So they're going to want to make $100 getting the gold out of the ground if they can. But you got a super strong dollar. In fact, the dollar today is at 84.44. You have a very strong dollar, but gold is still holding the line at 1250. But the dollar can still go up. The dollar can go up to 85, 86, 87. That's going to still push gold down. So if you're going to go into ABX, I 100% endorse it. But you've got to realize that it's going to be a long-term position, and it could easily go lower. And if it goes lower, you're going to hear bad news like, oh, they're going to break their loan covenants, they can't afford their service their debt, they're going to go bankrupt, blah, blah, blah. It's all crap. Obviously the banks have no choice but to work with people who are that big and go into debt. So if you want to play ABX, they're at 16.56 right now. I would sell the $17 puts because those net you in at $14.50. You sell those for $2.50. And you're netting in at $14.50. So that by itself, watch this trade. If you sell those, you collect. I didn't do 250, but you collect 2,300. Your buying power effect is only 1180. So it's going to be. 1,800. So it's going to be these are 10 contracts. So you're going to be for each 250 you collect, your buying power is going to be knocked down by about $1.80. So you're very margin efficient on this. So if you want to collect $2,500 by selling 10 of these for $250, it's going to hit you for $1,800 in margin. That means this play, that all you're going to do is you're going to say, I promise to buy 1,000 shares of ABX at net $14.50 in 2016. So in exchange for that promise, you're going to get handed $2,500 cash right now. And if all ABX has to do is be over 17 by that time, you just keep the 2,500, and your gain on margin is like 150% on margin. So who doesn't want that? Now, if you want to get more aggressive, you can pair it with a bull call spread. And if you look at the, you see these 15s are 320, and you can sell these guys at 22s for I'd call that 85 cents. Well, it's 95 cents for the last sale, so it's more aggressive than I would have said. So let's say 90 cents. So we take 315, go in the middle. So 315 minus 90 is going to be 225. So you can do this for that 225 here. You collect 250 here, so you'd still have a quarter credit. And you'd be in for a 25-cent credit on a $7 spread, the 15.22 spread that's currently about $1.50 in the money. And if all goes well, if they go up here and they hit 22, you're going to get back $7 on a 25-cent credit on that spread. All right? And your worst case is you're stuck owning ABX for $16.75, which is the price it is now. So it gives you tremendous upside leverage, very low margin on the trade, no cash out of pocket on the spread, and you have a great upside. So that's the way I'd play ABX. The less aggressive way to play, just sell those 17 puts for a fantastic entry. And if you want to get more aggressive about it, you can do the spread. But I'll tell you, if you do the short puts now, You can always do the spread later. You don't have to jump in the spread right now, because if ABX, even if it goes up a bit, that spread will go from 225 to maybe 325. It doesn't matter. You collected 250, so you'll be in for 75 cents on a $7 spread instead of a 25-cent credit. What's the big deal? At least you know that you have a floor and you know ABX is taking off, so it's a lot less risky if you add to it then. Would now be a good time to initiate an SQQQ position? Well, sure. We like the one we have, but if you want, if you want a fresh one, let's see. SQQQ. I never like to get wrapped up in what I have. So we think SQQQ is going to fail now, between September and October. October is only 38 days away. I'm not so thrilled with that. December is nice though, and since SQQ is at 35, let's take a look. Look at that. That's a great price. See, that's funny. Oh, because it's a 40 zone. I was going to say that dropped really fast, but it dropped really fast for good reasons, because it's $5 away. So I'd pony up this money. I'd pay $310. All right, looks like $310. $315. Okay, but anyway, so let's call it $315 worst case. So I pay $315 here, and that's to the 35s. They're in the money, on the money. And then what could I sell against that? Let's say we sell, maybe the 42s. You get 140. If you can get 140 for the 42s and do these for $315, what's your net? $315 minus 140 is $1.75, right? So $1.75. So for the 35.42 bull call spread, you'd be at $1.75. The spread is $7. You're at the money pretty much, so you're paying $1 something in premium, $1.50 premium, and you've got an upside potential to $7. So you can make about $5 on that spread. That's a nice upside. It's not fantastic, but if you offset that, then the amount you lay out. So let's say you're laying out the net. What do we say? 175. So you're laying out the 175. Now you just pick something that you really want to buy if SQQ goes down, like now, GTAT. What a fantastic time to do this. So now we go to GTAT, who just had a rough day. They're down to $15.75. We love them at that price. And you can sell the January 14 calls, $4.75. See, there you go. Trade done. So now you're going to promise to buy GTAT for $14. You're going to collect the $1.75 that pays for your bull call spread on SQQQ. Okay? And so if the NASDAQ goes down, don't forget that if the NASDAQ does go down hard and GTAT goes down with it, you're only obligating yourself to buy $14,000 worth of GTAT if you do 10, and you're going to collect $7,000 on the spread, which costs you net zero, so it's all profit. So essentially, in a vacuum, the question is, are you willing to own GTAT if the NASDAQ crashes for $7,000, for $7 a share? If you're not, don't make this trade. But in other words, if GTAT may crash and go down to 10 or 12 or something like that, but as long as you really want to own it and you're happy with that position, that's no big deal. Because even if GTA was at 12 or 10, let's say it went to 10, all you're going to do is go and sell the 2000, I'm going to use the price of the 15s, because if GTA was at 10, you see what you can do? You can sell a put for $4, you can sell a call for $5. That's 10, you can collect $8, $9, $10 here selling puts and calls. So let's say that at 10, even if you can only sell $6, you're going to drop your basis to $4. All right, so even if it gets assigned to you, it's not a big deal. You're just going to sell long-term puts and calls. It's a crazy stock. In fact, if you buy it now for $15.85, sell the $15 puts for $4.60, and sell the $15 calls for $5, let's say. So that's $11.60. I'm sorry, that's $9.60 overall. So if you, let's say you collect $9.60 or $9.50 here to make it easier. So let's say it's $9.50. You knock $9.50 off that price, and you're in at net $7. So in other words, you buy GTAT for $15.60, you sell for $9.60, let's say, the puts and calls over here at $15, right? And that nets you in fact, you can sell the $12 puts and calls for $7, or actually it's more than $7, it's $8. In fact, it's almost $9, 6 something and 9. So let's say you sell these two guys for $9, right? You knock $9 off that price, or 8. Let's say you knock $8.50 off that price. You're in for $7. You get called away at 12, which is a very nice gain. and the thing's a mile above the price. So if you want to play GTAT, there's a great way to play it by itself. But I'm sorry, we got distracted from the main point, which was you can sell the $12 puts for $260 to fund your bull call spread on SQQQ, see? And see, to me, that's what I call free, because I really, really want to own GTAT for 12 bucks. I really do. I'd love to own 1,000 shares of GTAT for 12 bucks. So if you're going to pay me $2,800 to promise to give you $12,000 for 1,000 shares of GTAT, I will take that deal every single day of the week. That's what being the house is all about. Some idiot wants to pay me $2.80 to promise to buy GTAT for $3.60 less than it's paying now, for 20% below where it is now. Why? Because they're panicking because GTAT has dropped 10% in a day. So they think it's going to drop 10% tomorrow and 10% the day after that, another 20%. And because of that panic, I'm able to take advantage of it and be the house and take their dumb bet. All right? You see how easy that is? In fact, we're going to make that an official trade. That's too good to pass up, so we're going to take a look at that. I'll put it in later. We'll take a look in chat. I don't understand how you determine spread parameters. Well, Chrissy, that's what these seminars are about. There's a million factors involved, but we look for a good price, we look for a good spread, we pick a good time frame, and we pick a spread. All right, it's what we're trying to teach you bit by bit. It's not something. It's not. It's almost like you're sitting there saying to going into a medical school the first day and saying, I don't understand how you're taking out that heart. This is why you're going to be here for a few years learning. It's not like I have a 5-point guide to show you how to do these things. You have to learn over time. There's no magic formula here. It's all based on a lot of things, and a lot of it starts with learning about the market, understanding what we're doing and why we're doing it. Liquid metal, 19 cents. All right, see, here's where liquid metal starts getting interesting, but we've got to study. You can't make a snap decision because we now have to look at liquid metal. We have to figure out where they stand now with Apple and where they stand with other stuff and take a very close look at the company. But I love them. I really do want to get involved in liquid metal. And Alan says it's like rocket science. It's not really like rocket science, though. It's just a profession. And Chrissy, I don't want to be snappy about it, but I mean, the reality is this is a profession, and you have to take it seriously. If it was easy, everybody would be doing it, and these spreads wouldn't be there. Do you know how insane it is? And again, I want to make this really, really clear, okay? While we're talking, GTAT is going up because you guys are buying it, but GTAT is at $15.70. I can sell the $12 puts for $2.70. That knocks my price down to $13, right? Now, I can also sell these calls for $6.35, all right? So let's say, so I'm at 12, and now I'm going to knock another $6.25 off. So that's going to drop me down to $6,575. So my net entry price, no, what did I do wrong? This knocked me down to 13. I'm sorry, that knocks me down to 13. Then I'm going to sell those for $6.25. That's $6.75. Sorry, my net would be $6.75. My call away off $6.75 is 12. That's almost double. These are what you call missed prices. It's not an efficient market because people don't understand it. All right, so yes, it's rocket science to some people, but you know what? There's rocket science and there are rocket scientists. And rocket scientists are the nerds who look at you and say, you say, oh, that thing will never fly. And they're like, of course it's going to fly because it weighs this much and it's got this much thrust and this much wingspan. They look at you like you're an idiot because you said it wouldn't fly. And they're like, yeah, of course it flies. You can see that it flies because I know science. This is the same thing. If you learn options and you understand it, you'll look at this GTAT trade the way I look at it and say, of course that's a good trade. It's obviously a good trade because you're going to net into that trade for less than $7. You're going to get called away at $12, and the only way, and your worst case scenario is you end up owning GTAT at 12, and that goes back, now remember, see, it's what I'm talking about over time. That goes back to my Levi's example, and I know you've heard this one, Chrissy. It goes back to the Levi's example. I know what GTAT is worth, and it's worth more than 12 bucks. So if you want to sell it to me for 12 bucks, I'm going to be happy to buy it. But all I'm doing right now is promising to buy it for 12 bucks because it's currently $15.60. It's not 12 bucks. But I know for a fact I want to own them at 12 bucks, and therefore this whole trade makes sense to me. It's practically like giving me free money. So all I have to do is decide how much of a commitment I want to make to GTAT. I will pay my net whatever, my net 675 for the trade. And let's say I want to do 2,000 shares. So I'll do 2,000 shares at 675. Oh, there you go, Alan. Great. So in other words, I do 2,000 shares, let's say, of GTAT. My net is 675, so that's $13,500 is what I'm going to lay out for this trade. Margin-wise, though, it's going to be way lower than that. If you have portfolio margin, it's going to be like a $2,000 layout. And then my call away on the spread is going to be at 12. So at 12, what do I get? I'm going to get back $24,000 for my 13.5. All right, and my profit's going to be $8,500, which is a lot. Yes, so it is 8,500 out of 13.5. So let's see, that's 8,500 divided by 13.5, 63%. But this is what the whole long-term portfolio is. The reason the long-term portfolio is up 20% in a year is because it's full of trades like this. This is what I'm teaching you how to do. We've been doing this all year long, and they work over and over and over again. When you see an opportunity and you understand how trading works, then you can take advantage of the opportunity. If you don't understand how trading works, and if you look at every position like it's some black hole, and you look at these charts and you think that these charts matter more than the actual value of the company, then it's always going to seem like voodoo to you. I'm trying to teach you it's not voodoo, it's a science. And I'm going to teach you how to be a scientist, okay? You're going to be that option scientist, basically, and learn these things. But you have to you have to put in the effort to learn, and you can't keep saying, what's the easy answer? What's the quickie way to do it? What's the cliff notes to this? That's not how this works. You've got to learn this stuff, and you've got to understand this stuff, and you've got to take the time. And Chrissy, I happen to know you're not an actual PSW member. You just come in on the free seminars. And that's why you don't know this stuff, and that's why you're constantly drifting and always asking questions and looking for a shortcut. You're not a member. I teach this every single day, and if you did learn it every single day, you would understand how this stuff works. But if you're going to drift in once in a while whenever a seminar is free instead of being a private member seminar, then you're going to skim along. And instead of it taking you 1 or 2 years to learn this stuff, it'll take you 20 years to learn this stuff. I can't help you because there is no shortcut. It takes practice, hard work, and dedication. That's how you're going to learn this stuff. How about selling 12 calls naked? That makes no sense, Alan. Why would I sell 12 calls naked? I think it's worth more than what things are being sold for. I love GTAT. I wouldn't sell the 12 calls. No, and no, again, and Alan, you might be missing the point. I do expect it to be over 12 by then. I don't care because my net entry is $675. So I expect to be called away at $12. I have no problem with that. That's great. At $12, I make $5.25 off of $675. So all I'm doing, so it's a very, one of the things that's a nice conservative entry, and I like nice conservative entries like that for the income portfolio, which is probably where we're going to put this trade, because it's hard to imagine how you're not going to make 60% in 2 years, not even 2 years, in 16 months. So that's what I want. If I have a retirement account where my primary concern is not losing my retirement nest egg, I want trades like this. I make money as long as GTAT is over over 12. And so what's my worst case? My worst case is the market crashes and GTAT is at 9. But if it's at 9, what am I going to lose? I'm going to lose 2,000 times 3. I'm going to lose $6,000 bucks. If GTAT falls from 1550 to 9, I'm going to lose a lot less than what it would be otherwise. I'm going to lose half of what I would lose if I bought the stock straight out. But my chances of winning, my chances of making my 60% are incredibly high compared to somebody buying the stock now. Prediction on BKW? No, I thought BKW is shorted already, so that's something we have on the books already for that. Chrissy says, don't yell. I'm not yelling, Chrissy. I'm being emphatic. All right, it's really important you understand this stuff and other people understand this stuff, but this is not a game. This is a profession. Selling options is a serious thing. It's like, it's the same thing, same way you wouldn't just run on a football field and jump into a pro game right away with no idea what you're doing, because you'll be killed. The same's going to happen in options. If you don't take the time, if you're sitting there, if you have the money to play options, but you don't have the serious, if you're not going to be serious enough about it to learn it before you play it, then you're just going to end up tossing that money out the window. We need to know how Apple can impact. Apple impacts everything. Apple is such a big company with so much earnings that its earnings by itself impact the entire S&P 500. Oh, but Apple just failed 100, so I guess nobody likes that watch. And really, it's not impressive. That watch is not impressive at all. I don't care what kind of features it has or whatever. It looks like a watch. That's a big mistake to me. It should have looked like a space thing. GTAT is what we're sitting on. Full-time for 4.5 years now. Oh, hey. Yeah, Jaber, I know who you are. And have you learned anything, Jim? That's the question. Have you actually learned anything in 4.5 years? And, okay, so I think, yes, GTAT is my favorite play today now. That's absolutely the great one. The NASDAQ we already won on, and now we're back to shorting the market. And that be the end of the seminar for this week, folks. All right, so thank you, everybody, for coming. This was fun. It's interesting considering what a weird day it was with Apple. And it's good seeing everybody here, and we'll do it again next week. Learning every day and having fun. Well, that's exactly fun and profits. Isn't that what we say at PhilStockWorld? That's our motto. So glad it's working out for you guys. All right, thanks, everyone, for coming. We'll do it again next Tuesday. I'll see you back in the chat room.